Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Friday, February 12th, 2016. I am Frank Ochoa with analysis for the current session here. Looking at the ES in the daily time frame, you can see after we saw some initial rejection here at around 1804, the previous month's low here, and that key range low, we've seen a little bit of a push higher. Overnight trading, we pushed right into previous resistance here. We have a key level at 1846. That key level has been there ever since we had that LVN form, but now prices have kind of chopped in the zone a little bit, filling in the LVN. The LVN has now moved up a little bit into about 1849, and you can see now this is where you have basically two-day highs coming in. So I could shift that 46 up to 49, and I may do that here heading into RTH. But the idea is, if you're a bear and you've been defending these pullbacks, to the upside, defending all rips and pushing it downward. This would be another area right here where it makes sense bears are defending. However, with 2 days of defense here, you're now going to have some buy stops above that zone. So if price is able to push beyond 1846 or 1849 and hold, you could see a return back to 1875 with a shot to see a move all the way into 1921. Remember, our idea before was for price to go from 1804 back to 1939. When price hit 1939, we were good. But then once price came back below and went offered through the HVN and retested, on this retest, we were looking for a move back into 1811. Once we saw a move and a rejection here, the idea is if bulls are able to defend the bottom of the zone, bring price right back to 1921, and now we have a clear trading range that is underway. So if prices can push beyond the LVN here and hold, the expectation would be for a return to 1921. Otherwise, failure to get back above that zone right now would put pressure on the lower end of this range, and we could see initial expansion to the downside. Now, I've talked about before, if price can't hold above the 1800 zone, it could be a very quick move into 1736 to 1746. I would believe that a test of this LVN at 1746 could be a first test buy opportunity for a return to 1800 and perhaps higher. So those are a few key levels to keep in mind as we head into the day. If we look at the ES in an intraday time frame, what I mentioned before was how price had basically been defended very significantly off the bottom of this range, and then you can see the top end of the range as well was heavily defended, and now we've seen a push through the top of that range. However, price rallied right into the 1848 5-day VPOC, coming about a tick or two shy of that level, and has since been turned away. That's the same area that went offered here just a session ago that led to the recent decline. So it's very, very clear 1848, 1849 is the key zone to watch above. If bulls are going to be able to push this thing above, you'd likely see a rotation downward, and then you'll see another attempt to go at it. Otherwise, failure to get above this zone right here opens up a return back toward 1811, perhaps lower. All right, let's take a look at crude oil. Here's crude oil in a daily time frame. This one saw a close below that key level of 27.56, and we saw a continuation through that level the previous session here. This is important, the way this one's playing out. What's happening right now is obviously price is retesting that 27.56 from below now. And this is a zone here where anytime you break down below a key level like this and push downward, when you come back, this is where bears would want to defend for a shot at seeing a continuation lower. So right now, that's the case. Bears are currently defending all prices at and just above the previous month's low of 27.56. If that is a successful defense, which it may or may not be, if it is a successful defense, then you have a continuation into the downside targets here, 2463 to 2494. Otherwise, acceptance back above the previous month's low traps these participants, and that could be used as fuel to return price to 3180 and 3343. So a couple of things to watch here in crude oil as well. Looking at the intraday time frame for crude oil, here we are. Basically, this one showed how prices dropped the previous session here, and this was the 50% expansion level that was being defended for much of the day. When price dropped below it, VPOC shifted down. That's right on the close, and that's what led to a snapback into the previous month's low. So that right there is some significant rejection here. And again, if bulls can defend perhaps 5-day VPOC on a return here, you could be looking at a push back above this key zone right here, which is going to be about 2780. So we'll see how this continues to play out as we head into RTH. Overall, what we see right now is just price significantly coiling, which could lead to early expansion right at the 8 o'clock RTH open. So you can see how this thing is just very, very tightly compressed. That compression right there, only 81 ticks, and we've been averaging $2.19 of range per day over the last 10 sessions. That's only 37% of ADR as we head into RTH. So very tightly coiled range. I would expect expansion out of this range right at the open, which could spark a decent move. Okay, well, let's take a look at gold. Gold saw a significant rally and continuation the previous session. Just a major squeeze overall. And obviously, we may have seen the final blow off top here, at least short term. I mean, this is just huge the way this is played out. Typically speaking, anytime you have a pattern like this, if the market was to close the session looking like this, this would be an extreme reversal pattern that could open up a move back to 1200 at the very least, if not a little bit lower. So we got to keep an eye on this right now. Obviously, we have a very clear area of support up here, which is going to be about 1232. We'll jump into the lower time frame right now, and that's really the level to watch, because if that level holds, then the expectation would be for a move even higher into 1280.4. So if we drop into the lower time frame, here we are. Here's the previous low at 1232s. You can see the RTH low here, and this is the zone that's currently being defended by bulls for a continuation higher. Failure to hold this level likely auctions price all the way back down into 5-day VPOC, which is 1192. So you can see that this is a very low volume node here, kind of the price discovery phase as it goes up. If price can't hold 1232, you're likely going to see price auction all the way back against that zone to fill in some of this imbalance. Keep an eye on the previous session's close here. It's been offered so far today, but above 1246 squeezes back to 1263 with a shot at those 1280s. All right, let's take a look at the NQ. Here's the NQ in a daily time frame. We had a significant rejection the previous session. By the end of the day, we were well higher, and this is a wick reversal candlestick here, something I talk about in my book, Secrets of a Pivot Boss. I mentioned that any pullback likely into about 39.20, 39.23 could offer a buying opportunity higher. Price hadn't tested that level in overnight, and all of a sudden we're still above the previous high. Now, one thing to keep in mind, we've been trending downward. We do have some significant defense by the bears at 40.36, and right now prices are testing above the 4,000 rounding, and a little bit of a rejection of there up above those zones. So this is just a very clear range here that's being developed. Outside of this range sparks the next move. So really, if bulls want to get this thing heavy to the upside, you got to get back above the 40.36, and that could open up a move all the way back toward 42.80 to 43.11. Otherwise, failure to get back above this zone has another shot at retesting these lows. And again, if you break down below that 38.93 half and hold, then we have some big time downside expansion targets to play to. So we're going to keep an eye on this range. Looking at the intraday time frame for the NQ, we've been pushing higher. Again, I mentioned the OTF swing absorption signature that defined the recent move yesterday. Basically, that occurs when you have a big push down. Here's your major support, 38.93. We saw a push down below it. There was a failed acceptance below that zone, failed range expansion, so price popped back above it. And then when you see price pull back here, there's a defense at that zone at higher price levels that trap these participants below 38.93, and that's a swing signature there that usually leads to a big time push higher. We're seeing some of that move now, but what you want to see now is any rotations find higher support levels than the ones we saw before. So 39.40 is 5-day VPOC. That's currently bid right now. That's the zone. So if price comes all the way back to this zone, you would expect bulls to attempt to defend and keep that bid for an attempt to push price beyond that 40 zone. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.